Hey guys, welcome back to the channel. Today's video is going to be about Lyft and 3 reasons why to sell. Please subscribe and hit the bell icon if you find this video helpful. That being said, let's get into it. Alright, so reason number 1. Costs for Lyft are increasing in a time where they should really be cutting costs due to dwindling rider demand. Alright, so here's the latest cost for Lyft. Apparently, they're going to be giving out 60,000 semi-rigid partition shields to their most active drivers. This was actually recommended by the CDC back in April. And they're going to be selling them to other drivers for around $50. So here's the problem I have with this. These less active drivers may feel they need it, but they don't want to pay the upfront costs. Especially if they only drive a few hours a week, for them it might not be worth it, so Lyft may lose those drivers. Also, some drivers for Lyft are going to get it for free, others are going to have to pay for it. That's bad PR for Lyft no matter how you look at it. They're basically saying we care more about the health of those drivers that make more money for us. Doesn't look good. Alright, so moving on. One may argue that the partition shields will make riders feel more comfortable when they take a ride with Lyft. For me, I don't buy it. I'd argue that the riders are more concerned about the social gathering they're actually going towards versus the one guy in the front seat. So if a rider is going to be comfortable heading to a place where there's going to be a lot of people, I think they're going to be willing to sit in a car wearing a mask. I really don't think that partition shield is going to make it or break it for them. Alright, so reason number 2 to sell Lyft. The stay-at-home trend. So pretty much everybody knows this is a severe headwind for Lyft, but I'm going to give an example of just a part of one industry that's going to show how massive this impact really is for Lyft. I think investors may be underestimating how much of an impact the stay-at-home trend is going to have on Lyft. So let's take one of the pharmaceutical companies, one of the big ones. We don't have to mention any names, but they're going to have thousands of field-based employees. They include sales reps, liaisons, and they fly to cities. And they use Lyft from the airport to the hotel to the hospital, back to the hotel, to the medical office, and back to the hotel. Just hundreds and hundreds of Lyft rides. There's also conventions all year long. And those employees use Lyft from the hotel to the convention, back to the hotel, then out to the restaurants and back to the hotel, then back to the airport. Just hundreds and hundreds of Lyft rides are going to be lost if these conventions are scaled back or canceled. So this is just a fraction of one industry. I'm giving you this example just to give you the sense of how massive the impact could be on Lyft if this stay-at-home trend lingers even a little bit after the crisis is over. All right, so the third and final reason to sell Lyft. So price always matters. And right now, the current price of $29.73 at the time of this recording is too high in my opinion. I'm going to take a look at this first graph just to establish a broad range. And it's going to show you the price where it ran up prior to the crisis and the low point. So as you can see, the high point is around $54 and the low point of the crisis is around $16. Obviously, that's an extremely large range. However, it's a starting point. So that's going to be a broad starting point, and then we're going to look at a few more graphs to really narrow it down to see where the price point should be. Okay, so let's take a look at this next chart. This is a 3-month chart of Lyft, and it's going to show you that it bounced off substantially off of that $26 price point and shot right up until the point where the market as a whole figured out that we weren't going to have a V-shaped recovery. Since then, the share price has trended downwards, as you can see, right towards that $26 price point again. Notice how the current share price is $29.73. That's why I think the current share price is too high. All right, so let's look at this last chart. This is a 1-month chart of Lyft. And as you can see, there's lower lows, it's trending downwards, and it's heading towards that $26, $27 price point. So in my opinion, with the current share price of $29.73, that's just too high. If you are willing to withstand these short-term headwinds and you want to pick up shares of Lyft, if it was me, I would probably wait until at least it touches $26, $27 a share. So that's my opinion on it. Okay, well that concludes our video. Hope you guys enjoyed it. If you did so, please subscribe, hit the bell icon. That being said, I'm not a financial advisor. This video is for entertainment purposes only. Hope you guys have a great day, and take care, and see you in the next video. Bye-bye.